This is Earnings Preview, a look at companies reporting during the week, along with companies which may have positive or negative earnings surprises. This earnings preview for the week of October the 12th through the 16th, as compiled by Charles Rotblatt, our senior market analyst at Zacks.com. And this is going to really begin the acid test for Wall Street this week with regard to earnings season. A lot of heavy hitters are going to be reporting earnings this week, and while we do need to see some real revenue growth, a real big profit surge is really not in the cards, is it?
It's not, and we're not even going to see a real growth in revenues relative towards a year ago, simply because we really didn't have the credit crunch really tying into the script till October. So still some tough year-over-year comps for a lot of companies. But I think what analysts are going to look for is how are these companies doing relative towards expectations? How are they doing relative towards second quarter earnings? And if we can get some revenue growth, it would be a nice thing, but I wouldn't expect it out of most companies who report.
And even a shot of better than expected results that the market may receive still won't turn the originally forecast overall negative number for earnings for third quarter into a positive one.
Oh, not at all. We would have to have earnings just far exceed any expectations, and that's not going to happen. And I think one of the things when people look at this, it's important to realize it's not just a credit crunch we're up against, but we also had the commodity bubble pop last year in the third quarter. So there's two really huge comparables. Now we will see some companies actually report revenue growth, see some companies report earnings growth, but I think by and large, when you look at what the median company does, it's going to have a drop in revenues, it's going to have a drop in earnings. And that's okay considering everything that we're going through. We're just now starting to come out of recession. And even then, to a lot of people, it feels like the recession's worsening, not getting better. So we're in a pretty big hole. We're starting to climb our way out of it, but we're still in the hole. And I think that's important for people to understand when they do look at third quarter earnings.
And despite just the cautious optimism over third quarter earnings, the market just continues to push to new highs here.
It does. The bulls are in control. We actually had the Dow set a new 52-week high. The NASDAQ and the S&P 500 were just shy of it. We're still in this fear and greed market. We had some very strong demand for bonds last week. The 30-year bond auction was a little bit of an aberration compared to what we've seen. But when we look at the bid to cover ratios, it does signal there were more buyers than bonds by a pretty wide margin. So people are still fearful. When we look at some of the rallies, we really didn't have strong volume last week either. So the bulls were in control, but you really didn't see a lot of bulls standing up, and you really didn't see a lot of bears. I think some of it might have been short covering, and I think overall for a lot of people, it's a hard market to short right now because you can say what you want about what's wrong with the economy, about how well the market has rallied, but the reality is every attempt to short just hasn't quite worked out. I have a short position in ETF Trader, and I comment to our subscribers. I'm down 1% on it, not very much, but I said there's timing risk. But I think someone looking at this rally thinking, oh my gosh, I've missed out on this rally. It's important to understand this rally has now gone on for over 7 months. At some point, it's going to pull back. Now, the question is, will earnings be good enough to get us to Dow 10,002, Dow 10,008? We'll know in a few weeks, but we do have some resistance levels for the Dow coming up, which could add to the upward pressure. Could add to the downward pressure, but by and large right now, the bulls are in control.
But you're not concerned at this point that the market has gotten too far ahead of itself, given fundamentals?
Yeah, it depends on how you look at the argument. The glass half empty argument is that we're trading at about 20 times trailing earnings. So on that basis, yeah, stocks are a little bit pricey. If you look at what's expected for 2010, we're trading at about 14 times earnings. So it really depends on what side of the argument you want to take. I don't think we're excessively valued right now, but I do think a lot of optimism is priced in, and we are looking at a lot of uncertainty, particularly with the second half of 2010. We really don't know what the pace of economic recovery is going to look like. And certainly, if you look right now at the first-time home buyers credit, a lot of push to have the government extend that credit. It's just a sign that the economy is not yet strong enough to stand on its own two legs without the government doing something to help out.
All right, and a fairly decent amount of economic data coming out this week as well.
Yeah, we'll have some inflation data. We'll have industrial production and capacity utilization. Several Fed officials will speak as well. But I think all of that will probably take a backseat to the earnings data, with the one exception being the Fed minutes, which will be released on Wednesday afternoon. And I think traders are going to analyze it for any talking point about what the Fed thinks about the pace of economic recovery. And that could cause some volatility Wednesday afternoon, possibly spill over to Thursday morning. But we'll have to see what bullet point the traders pick up on and whether they interpret that as being positive or negative.
All right. And if you want to check out a couple of companies that could surprise to the upside and at least one that could surprise to the downside, along with the earnings calendar that Charles has published in this report, go to Zacks.com's homepage and scroll down that homepage until you get to the earnings preview headline right next to Charles' picture, and it'll take you to all of that data when you click on it. With Charles Rotblatt, I'm Terry Ruffalo.